Wednesday, April 16th, market analysis. Stan Ehrlich, good morning, 9:53 California time. And we start out with the stock market indexes and go to futures and a couple of stocks in this case. E-mini and the other indexes had a lot of trouble making more upside progress December, January, February, and started to come down in late February, breaking out, all of them, maybe not the Russell, but the other ones, from a double or triple top, they have reached their minimum downside objectives. And that was actually about 2 weeks ago. And then all of a sudden fell apart because of tariff talk and came down, in the case of the E-mini, to a support area getting oversold. Now, just last week on Wednesday, a week ago, we had a very big bullish engulfing buy signal, ER signal. An outside up day, an oversold condition turns my custom candlesticks green. When that happens, it's a custom relative strength index and a custom candlestick also. Not quite exactly the same as the standard candlestick. So since then, what do we got? Absolutely nothing. The market hasn't gone up anymore to speak of. It hasn't gone down very much. It went down to around the middle or a little bit below that of last Wednesday's range, and has come back today. We're sinking off 7 points is fairly significant amount. It is below Monday and Tuesday's lows. Monday was the high, and it couldn't make any higher highs than the previous week. It slipped a little yesterday, a very small doji, and today, minor new lows for the last couple of days, but nothing consequential so far. Now, because of the bullish engulfings last week, I have to be bullish and expect to see more of a rally than we have seen so far, which has been negligible. I'm really looking for a move back up to 5,800, maybe 5,850, and probably that's about it. But we're having trouble here. This market doesn't seem to have the follow-through after the bullish signals that I was expecting. So now I've got to be on my toes for anything drastically bearish. And of course, if we get back down to 4,800 again, that could be super bearish, very bearish. Not just for the E-mini, but it's going to drag everything else with it, of course. So I'm looking for a short-term rally, and I'm not getting it, and I'm not happy about that, and I'm kind of going neutral momentarily. I don't usually take a sideline commentary. And the 1 minute chart just shows it made a new low last night, held, rallied up, closed a little gap, came back down, didn't make a new low, went back up, didn't make a new high, came back down right now. No new lows. Let's go to the spider. Same story here on the spider, except we do have a very small gap between today's high so far and yesterday's low. And there was a bigger gap this morning when it opened down here. So it did rally to try to close the gap, but didn't quite finish it. So that is that story. And then there's the gap up here at 555 to close, and some resistance above that. I'm basically looking for 565-ish to stop this rally I am looking for and not getting yet. So again, a little on the neutral side, and the 1 minute chart going sideways, a little lower so far today, down 6.5. And we've got the same thing happening on the QQQ, a gap to close above today's high between yesterday's low and today's high, a bullish engulfing in this particular case on Monday of last week instead of Wednesday. And it is the low of the break in a support area in oversold conditions, and that is a perfect ER signal at the bottom so far. And we have had higher highs, but it was on Monday, not on Wednesday. We have not been able to get higher than Wednesday's high so far on the QQQ also. So at least this signal's on the very lowest low. The other ones were close. And the 1 minute chart, not much to say. Now we've got the Wednesday signal in the NQ on Wednesday of last week. And so far we've been unable to get above that high. And we dipped back down on Thursday, came back a little Friday, Monday, a rally, but didn't hold it on very well, closed higher. Yesterday, about unchanged, and today slipping off a little bit with the rest of them, but no significant breakouts or damage done or anything like that. We're kind of getting stuck here between the high and the low of that reversal day on Wednesday of last week. Here's the 1 minute chart. What about the YM, which is the Dow Jones? Same story. Came down, dropped lower into the support area that didn't hold, but oversold conditions and a bullish engulfing on Wednesday of last week. We barely made it above Wednesday's high on Thursday, dribbled back down a little on Friday, came back up, no new highs on Monday, dribbled down on Tuesday, and a little bit lower again today so far. Not much happening here. I gotta wait. Probably not very long either till something happens of consequence. And the 1 minute chart on the YM. Russell. Pretty much the same story, but the Russell didn't have that double top formation or a triple or a big sideways top. It just simply started to slip off and kept on bouncing and going down and new lows, etc. Got to a support area like the others, got oversold like the others, and had a bullish engulfing on Wednesday of last week like the others, except for the QQQ. Bounced, couldn't get above last Wednesday's high, came back down a little, up a little, down a little, sideways. 1 minute chart, same story. Okay, let's go look at bonds. They're squeaking their way up very slowly here, very slightly higher high today than yesterday. It's approaching some resistance. We have to get to and through this area in order to get to the next one, and then the next one. The sell signal that I got on April 7th has worked very well, even though I didn't expect it to work very well. It certainly did. When you have an automated trading system, you've got to follow the signals. If you start intervening and say, I don't like this one, I like this one, I'm going to do twice as much on this one, I'm going to do half as much on this one, you're cherry picking the signals, and that's ruining your track record as far as consistencies go. And it's not a good idea. If you want an automated system, it's supposed to be automated. You sit back and watch. And if you need to stop because it's not working the way it's supposed to, stop, revamp, come at it again, or just keep trading because it's doing very well. And my ER1 scalps have been doing unbelievably well. And someday I'll show you guys, but it's not quite finished yet, but 2 years plus. Great big, good results. Okay, so, and this is the ER signals, but it's just the ER1 scalp, not one overnight or three scalp or three overnight. And they're all derived from the ER signals you're looking at to begin with. Got a bottom right there in bonds on the low day, January 14th. Got another bottom of huge consequence on October 23 of 2023. And some other really good signals and some bad ones. Now, remember, the bad ones, I get stopped out very quickly. I don't get crushed. I don't get stubborn. I don't wait around to see what's going to happen next. The rules are the rules, and you're out. Or you're still riding the trade. Rules are rules. Now, oversold, bouncing off of a trend line, basically, up to resistance. I'm thinking it's going to go a little bit higher, but after that, let's see what happens here. You know, this tariff stuff is really throwing a monkey wrench. Okay, so 10-year notes, slightly higher high, now in a resistance area, but it's not even close to being overbought. So I'm thinking I might even come up a little bit more. There is a significant chance that a bottom formation is developing, but it's not a head and shoulders. So I'm now going to go ahead and erase the markings for the shoulders because this is too low and too far away. Well, not actually too low, but too far away from the timing point. And the rally that happened in the interim was way too high. This shoulda, woulda, coulda been, and looked like it was classically an upside breakout, even with an upside gap across the neckline, and that was on April 3rd, just a couple of weeks ago. Excuse me. And it didn't hold. The bearish engulfing killed the pattern completely, so I'm really going to erase the neckline now as well. I just gave it too much time. Not there. All we got is a big trading range at this particular juncture, and a very possible broad, long-term, 1.5-year double bottom. And that is in the ballpark of 107.5-ish. Okay, crude, heat, unleaded. Amazing differences here. Crude, we have a buy signal in the bottom day. Perfect. Big one, retracement the next day, 2 or 3. Perfect. Starting to come up today. Good news. It's going to be a new high close, it looks like, for a few days. Good news. It looks like it's going to hold near the high and maybe even make new highs before the bell. Good news. So I'm looking for at least a rally up to 64.40, 64.90. That's pretty significant resistance, and it's not that far up. Let's see what happens after it gets there. I hope it gets there. We have another buy signal, just like crude oil, here in heating oil today. Now, that is really unusual to see two buy signals on the same kind of commodity energies doing basically the same thing. But here they are. So I'm going to have to say exactly the same kind of thing in heat as I did in crude, except the heating oil has held at a much more advantageous low at 1.93. Back here, you had a low around the same price level. So this could develop into a very broad double bottom. Actually, I should put a little rectangle across that price range and time frame. And here you go. Wow, that's very, very, very close. Okay. Yep. Broad double bottom. Didn't see it before, but now that I've gotten a double buy signal, I'm liking this story a lot. Huh. If we start closing above 2.5, let's say, then I'm going to have, okay, I did see this before. Then we're going to have an upside objective of 3 and small change, 3.08 or something, just a little bit above 3. That's what it looks like. Actually, that's not quite right, ladies and gentlemen. Sorry. Let me readjust that objective. Here's the measurement. The lowest low between the, where the lows are, and this is very close to each other, so it's not much point in being super exact, to the highest high between the two lows. That's your depth of the formation. So you take your measuring stick and you put it at the lowest level at the high between the two lows, and you get an upside objective of, okay, it's almost the same, 3.0 something, period. Possible broad double bottom in heating oil. I'm bullish, looking for various resistance levels to get reached and overcome. Next, we had a buy signal in natural gas, but it was already on the way down because of a head and shoulder top that was working fabulously well and still is. We have another new low today below all of the lows since the breakout to the downside. And now we're probably 80% down to the minimum downside objective I've been talking about for weeks, which is almost at 3, 2.97-ish. And that is the minimum downside objective. We could get lower easily. What can I say? We're not oversold quite yet, getting close. I think we're going to reach the downside objective very soon, maybe in less than a week. Next, gold is now overbought for the first time in a couple of weeks and shot up tremendously higher today, all-time historic levels. and is now again overbought. Now, this could develop into a divergent sell signal because you got way new high prices in the price scale, price chart, but not in the indicator, which is not even close to its previous RSI high level of around 88. We're just a hair under 80. And it looks like it's going to develop a potential divergence, new high in price, but not a new high in the indicator. So I'm watching for sell signals. I would not be buying up here, that's for sure. If you are short and in pain, maybe you give it a little bit more elbow room to see if it'll turn down before you give up. So you're in a very uncomfortable position, but it just could start to slide very soon, and a pretty good break. Next, silver. Not overbought, not close, going up great, had a buy signal close to the bottom in a support area, or touching it at least, and it did bottom out in a support area, which at the time, by the way, a week ago, looked like a downside breakout, and we have had a downside objective all the way down to here. So I'm going to erase that measuring stick and just keep the support level highlighted, which it still is. Now we've reached my objective, which is the resistance area. Could get a little stronger. It's not overbought yet. So 33.6, and I cannot rule out a test of these previous stops around 35 and a half. It tested support and bottomed out, and we are really developing a huge sideways trading range. How big is this? Yeah, it looks like it goes back all the way to April of 24, a year in duration. Okay, so we're stuck between a rock and a hard spot, and we're getting close to some sell signals, probably. Platinum, new highs for the rally. We had a double buy signal, almost at the lowest lows. Market got oversold, bullish engulfing, and 2 days later we had another one, similar to some stock indexes, similar to crude and heat. How about that? So, a little more strength, not oversold, probably going to come up to 1062, I think. Maybe a hair lower than that, at least 1031, or maybe a bit higher. But if it goes up steadily, you're going to get way overbought by the time you get up to these previous highs, and that is more likely than not going to turn it back down again. So I'm a bit more bullish for a little while longer. High-grade copper. We got almost the exact bottom of the market with green bullish engulfing a few days ago. Today, you have another new high for the rally, and it looks like it's going to have a little bit of a new high closing price also. Nowhere near overbought, plenty of elbow room, looking for probably 4.8, 4.9, and it might even get all the way back up to 5.3. Soybeans, oil, meal, corn, wheat. Now, meal and wheat are my two problem childs on the grain group at the moment. But beans, oil, and corn are doing significantly better than a week ago. Soybeans has had a very nice rally off of a support area, extremely close to oversold, almost turning yellow, but not quite. And now looks like it could even make new highs again. We had a little high early or Friday last week, dribbled back down very slightly, and today there's a bullish engulfing. It's not green because we weren't oversold within the last few days, and we're not oversold at the moment at all. But a bullish engulfing is still friendly, should push prices higher, and I think it's going to. So I'm looking for the 1060 level to be tested again, and we might even keep swinging up until we hit to almost 11. Now that's a key number, 1,100 for soybeans, because if we start closing above that number, you got a major long-term breakout of a big sideways trading range in which you got a fairly nice looking double bottom. Or you could call it a large triple bottom. One way or the other, the upside objective is very substantial. Again, you got to get above 11 on a closing basis. And that objective would be 1207. Soybean oil is very close to having an intermediate, longer term to intermediate term breakout with a well-defined double shoulder, head and shoulder bottom. First shoulder, including a bullish engulfing ER buy signal, March 1st of 24. Second shoulder low, May 9th of 24. Now, the lowest low, the head, is August 16th of 24. And just after, we got a bullish engulfing that worked pretty good. Then we basically have the bottom with a bullish engulfing December of 24. And another bullish engulfing involved in the bottom, not quite the lowest low, on March 20th. So there's your shoulder, shoulder, head, shoulder, shoulder, 4 of which have bullish engulfings involved. Pretty good. Now, where are we? We almost had a new high for the rally for the last week or so today. Looks like we're going to have a new high closed by a modest amount. I would not be surprised to see this thing start to pop up dramatically all of a sudden, but we're back in this resistance area again where we've had a lot of trouble again. So let's not have trouble this time. Let's stay up here and push into new high ground. All of that having been said, this head and shoulder bottom, double shoulder head and shoulder bottom, will have an upside breakout in the ballpark of 50.50 in the next week or two. And if that happens, the upside objective on the pattern, which will take probably a few months, will be 61.94. Call it 62 from 50. That's a pretty good move, pretty darn big move. What about soybean meal? One of my two nemesis there, the wheat and the meal. Close to the lowest lows that it's made only a week or two ago for many, many months. Trend is still down. All it did was get oversold, a new low ground, bounce up to resistance, and is having trouble getting back up above resistance again. So I need to see this thing start moving up to 306, 789, 310 and higher to have a minor upside breakout and be able to overcome some overhead resistance. Then we need to close above the major bear trend line at 235-ish, and it does slant down, so it's going to get a little cheaper every day. But it doesn't seem like we got the strength in soybean meal yet. What about corn? Corn market has had a nice rally, did make a new high for about a month plus. It did have a little double bottom here recently in the last month and a half. And the last low on the double bottom was a bullish engulfing ER buy signal that's green. Great. Exactly on the bottom. Now, that little double bottom, I think, is the last shoulder of a head and shoulder bottom that has its roots, the head, on August 26 and 27. Yep. And I think these lows are exactly the same price, double checking here. 407.50. And yep, that's exactly correct. The lows for these 2 days on August 26 and 27 were to the tick, exactly the same. That's the head. And at the time, it was the head also of a smaller head and shoulder bottom that already proved itself correct and worked correctly and got to its upside objective finally in January 23 of this year, come and gone. But that head and shoulder, small head and shoulder, 3 month or so head and shoulder bottom was the head by itself of the larger pattern, which started in February of 24 with a bullish engulfing ER buy signal on the bottom. Come on, get with it. These green bullish and bearish, the red ones are bearish, of course, are oftentimes at the top of markets and very often at the bottom day. That's why I developed this technique. Next. Wheat, like meal, recently made new lows for the whole damn trend. Doesn't seem to have the strength to overcome resistance areas. Continues to have rallies that fail. Can't make new highs for several months. Makes new lows for a long, well, since the war began. And it topped out with a bearish engulfing signal, ER signal, on the high day, right smack at the beginning of the war. after limit up moves. Fantastic. Probably the best signal I've gotten in a decade for the top of the wheat market 3 years ago. Okay, so we need to overcome resistance here. You got to get up to 575 plus on a close, and I'll feel a little bit more confident about the longer term bullish situation. But looking at this chart by itself, it ain't got it. Every time it rallies up to resistance, it's stopping and pulling back down. Now, yeah, right now we're up a little, and yeah, we could have a bullish engulfing today, but it hasn't happened yet. And in which case, we have a bullish engulfing. I'll be talking about a little bit more strength tomorrow, and probably expecting a minor upside breakout. But again, the one that's really significant short term is 575 plus. Okay, what do we got for cattle? A nice strong rally going up to close the gap I talked about yesterday and probably earlier. We bought the bottom of the green bullish engulfing signal. We got the bottom of the green bullish engulfing signal on March 4th also. And the first high of a little double top was a bearish one. So I'm just a little bit more friendly here to close the gap, but we'll see what happens after it gets up to close the gap. Now, it's probably not going to be overbought, and I could still expect a challenge at 207, in which case you're very close to another new high for the whole trend long term. So I can't see this topping out yet. I don't see a major top. I see it challenging the highest highs and maybe making new ones. A week, 2 weeks, 3 weeks. I don't know what's going on with Miss Piggy, so I'm going to pass her up. And Shell. First of my two stocks, bullish engulfing at the bottom. Now we finally have a rally above the highest high for that bullish engulfing, so it's definitely worked. Even with a retracement coming down very close to making a new low, but it didn't. And turned around in the last 3 days, bingo. Like what I see. I'm talking again about the market rallying up to probably 69.60, and I wouldn't rule out 71.88. Now, having said that, as long as we don't have any reversals and don't get too overbought, if we get up to that 72 level, we could make new highs for the whole trend and have a very, very important longer term breakout. That would be very, very profound, longer term. But again, you've got to get up to 75, I'd say, on a close. That's a nice sell signal right on top on that. There's a very good buy signal right there, too. Okay, last is Apple. No buy signal, oversold condition, at a support level, started a rally real nice, and is slipping off a little bit today, as you might expect with the other indexes. I think there's still a chance we're going to go up to 216 and a fraction in order to close the gap, and maybe leave it a little bit higher. We'll call it 220. Yeah, 220 in order to hit the resistance level. We'll see what happens after that. And back to the E-mini, which is bouncing off a little support. You guys have a great day and profitable trading to you.